Welcome to the Jay Martin Show. My name is Jay Martin, and my guest today is Jeff Clark of thegoldadvisor.com. Now, I love picking Jeff's brain when it comes to stock picking in the junior mining sector, and today I pulled 9 picks out of him. So we get 9 stock picks today from Jeff Clark. There was one mine we were struggling to remember. It's the Artemis project. So when we get to that point in the interview, just there it is for you. But Jeff's always incredibly enlightening to speak to. I love picking his brain just on investor psychology in addition to where he's allocating capital. As always, I publish a weekly newsletter, so I got to point attention to that. There's a link right beneath this piece of content if you like my style and if you want to hear from me every Sunday. I'd love to have you join the team. Anyways, here is Jeff Clark. Enjoy. Okay, here I am with Jeff Clark. Jeff, it's great to see you again. Thanks so much for coming back on the show.
Thanks for having me, Jay. Great to be here.
Now, I promised all my viewers that over the next half an hour, you were going to very simply explain how they could each make $1 million in the next gold market. So that's our mission right now.
Hey, you know what? Somebody's going to make that kind of profit in this next bull run, right? So you got to be long, though.
Let's talk about it. So I want to get into where you're allocating cash, where you're looking for opportunity. Prior to that, right before I hit record, one thing you mentioned that we were talking about what you're paying attention to. And you said, short term, you're focused on the Fed pivot. Longer term, you're looking at the sustainability of the monetary system. That's the thread I'd love to pull on right now. So if you can elaborate on what you're concerned with and what you're focused on that bigger picture monetary sustainability for me, that'd be a good place to start.
Yeah, I think there's 2 major catalysts for gold moving significantly higher. One is short term, one is longer term. The short term one is the Fed. And I hate having to say it relies on the Fed, but it does. And that is basically, in my opinion, that short-term catalyst is going to be a full pivot by the Fed. And by that, I mean not just them stopping raising rates, but actually making a full pivot and beginning to lower rates again. And Jay, my opinion, a little prediction here, I think that happens actually before the year is over. The reason I say that is we're probably seeing one more rate hike. And then the average time from the last Fed rate hike to the first rate cut is just 5 months. Based on history, going all the way back to the 1970s, that's the average time frame. So if they raise again in May, let's say 5 months is October? Yeah. So I think it is highly likely that the Fed will actually begin to lower rates again. Them becoming more dovish is very bullish for gold. And of course, there's other factors like, I think QE is going to be probably the next one to come into play. Then they're going to begin to, create currency again. And that's going to be another catalyst. So that's the short-term catalyst. The long-term or big picture catalyst for me is the monetary system. And there's been a lot of talk about de-dollarization recently. I think that's a trend in motion. It's going to continue. For me, though, to be honest, Jay, that's like a barge in a port trying to negotiate a 3-point turnaround. It's going to take a time. It's going to take time. It's going to take a while. It's going to take more infrastructure. It's going to take more countries coming on board. It's going to take more countries having the ability to do that. So I think it's going to happen. And even, Brent Johnson, milkshake theory, US dollar milkshake, that he thinks that's going to happen. And he owns gold now. But I just think it's going to take a little bit more time. But the clear picture is right in front of us. The current financial system is unsustainable as it is, whether you look at the debt. And by the way, not just the debt, but interest payments on the debt. Mm-hmm. As of right now, it's probably reached $1 trillion annually. The Fed website is a quarter behind, and it's already showing it's almost $900 billion. So by now, it's probably $1 trillion annually just in interest payments on the debt. So you have that. You have market conditions, geopolitics, long-term debt, short-term debt, real estate. I mean, the list goes on, Jay. So I think there's a lot of catalysts in the big picture that could really flip this thing and push gold into a sustainably higher, high conviction bull market. And that's going to be a lot of fun for us, for those of us that have been waiting patiently but are fully prepared.
Yes. Okay. And you're right. I think at these rates, debt escalates, sorry, the interest payments on the federal debt escalate to the largest line item on the federal budget right now, surpassing military, health, entitlements, all of this. So that's interesting. You expect rates to pause in the next couple of months. There's generally speaking a 5-month hangover or just, waiting period before we begin to manipulate rates to the downside. Since the 1970s, that's been the trend. Anything other than, recent banking crises, what's giving you higher conviction that the rate hikes are finished as of, this month or next?
Well, they can't afford to keep doing it. That argument's been around for a while, but they really can't afford to keep doing it. So that's part of the basis for it. Whether you look at the interest payments or the debt or what they're doing to the economy, the recession fears, the stock market weakness, there's a lot of reasons for them to stop it. And now inflation is cooling as well. So those, diehard hawks out there are losing a little bit of their impetus to continue to push higher rates. So I think all those factors add up to the fact that the Fed is probably going to pivot, regardless of what someone thinks they should do. I think the reality is they probably will pivot. Maybe they raise rates 2 more times instead of 1 more time. Again, that puts us at the end of the year on average for a full Fed pivot to kick in.
You pay much attention to the, I think, very near-term debt ceiling debates that are going to arrive? Or at this point, Jeff, is it kind of like it's just a bit of political theater? We know what's going to occur. They'll raise the debt ceiling as they've done the last 78 times we've hit it.
Yeah.
Yeah. Okay.
I mean, I'm definitely in the latter camp. It's all circus to me. It's political theater. It doesn't mean a lot to me. The great thing about that debate is it doesn't matter which side you fall on, even if you're at one extreme or the other, it doesn't matter. The reality is gold is the only thing that's really going to protect you and get you through the crisis to the other side of it. Like Doug Casey's famous for saying, right? The idea is you got to get through the crisis. You got to get to the other side intact so that you can not just profit, but have your whole lifestyle still intact and be able to participate in a wealth transfer. So I don't give much attention to that because the answer to me is always the same. At this point in history, you must be overweight gold and silver.
So let's jump into that, because another thing you pointed to in advance of this interview was one thing that the media and mainstream largely misunderstand is the role of gold in a portfolio. Now, granted, my audience is a bit more up to speed on this than most, but I'll say a couple things. I'll say that the number one question I got asked at my conference in January in Vancouver was, how do I get started? It was a variation of that or that exact question, but it was, how do I get started? Where do I begin? Who should I read if I'm just entering the space? And these weren't juvenile investors, but they were juvenile resource investors. And so we are seeing a flood, and it's great, of new energy, eyeballs, ears, and wallets come to the resource business. And so, it's okay to start with the basics. When you say people misunderstand the role of gold in a portfolio, what do they misunderstand?
Jay, it goes beyond just the average retail investor outside of our little circle. It goes into the institutional fund crowd as well. At a conference, and it wasn't yours, thankfully, but at a conference, a fund manager, I was at a dinner with several fund managers. One of them, I struck up an interesting conversation with. And Jay, he had no idea. He didn't believe me. He actually started mocking me publicly at the table in front of these other people. He didn't know that gold had outperformed all stock indices since the year 2000. He said, he started laughing at me. And I said, you need to go back and look at the data and the research and just pull up a chart. It's very clear. He didn't even know that. And he was at a mining conference. So it goes way beyond just the average retail investor that is truly wanting to know about it. And this is all predictable, Jay. This is what's going to happen. Gold's going to make a new high at some point, and it'll go on a run. And all of a sudden, you're going to have mainstream media and institutional fund managers and money managers coming along and saying, gee, look at gold, how strong it is. And look at this, it's outperformed, stocks since 2000. Why you need to have exposure to gold. These articles are going to come out. They're all predictable. And yet us in our little circle, we already know this, right? But what it means for us is that there's, that's going to draw a lot more interest to gold. That's going to push gold demand higher, which of course is going to push the price higher. And all of us are already positioned, right? And I will tell you, by the way, you mentioned being asked that question. The number one search on Google right now is how to buy gold.
I saw that. Yes.
It's the highest ever in Google's history. How to buy gold. I thought that was really interesting. I'll also point out anecdotally that I had a close family member, I won't say who, but they called me up and asked, Jeff, I'd like to buy some gold. And this was right after the SVB crisis, right? After that blew up. Okay. This person called me within a week of that happening and said she just was uncomfortable with the stock market. She wanted something that was 100% safe. And I told her, well, I can get you to 99.99% safe. But it was very interesting. This person has never invested in gold or silver or anything, mining stocks. They knew what I do for a living, zero investment. And now all of a sudden they decided to invest. So it's starting to feel like this is picking up, Jay. It feels different than a year ago. And things are starting to gel. So, look at all the stats and data and everything we want, but my gut feeling is, it's just starting to feel a little different out there right now. And this feels real. People are nervous. People are scared. There is uncertainty, and all of this is going to contribute to you and I and everybody else listening to this becoming a lot wealthier. Yeah,
I'm ready, Jeff.
Right.
Look, it's I like the way you outlined it there. And, we've watched heads turn, I suppose, towards the gold market, starting with, central banks massively increasing their allocations over the last year. I was chatting with Randy Smallwood earlier, CEO of Wheaton Precious Metals. He just got back from 2 weeks marketing in Europe and Asia. He said a full 30% of the meetings he took were brand new precious metals investors. They didn't have a background in the sector, but they were suddenly looking for exposure. Similar at my event, like what drove a whole ton of new investors to a junior mining investment conference. Like we're a very niche event, it's a niche event.
It is, but it's going to become more than niche. It's going to become, temporarily mainstream. I mean, because a lot of people are going to move, 1%, give or take, of the U.S. population. I don't know about Canada, but the U.S. population owns any gold. I think that's ticking higher now. It's really brewing now. But imagine that just going to 5%, not back to where it was in 1980. Just to 5%. How many billions of dollars that's going to mean coming into the sector. And so, Jay, I hate saying things like this publicly, but once I do think a gold mania and a silver mania especially is ahead. And, we're going to see, gold double or triple. We're going to see silver go 3, 4, 5x. And then don't get me started on the mining stocks. I mean, some of these are really going to explode. And I have tons of examples in the book about when these things have exploded in the past. This has happened many times. This is not like a one-off. This has happened many times throughout history, and it's going to happen again.
Well, let's do you know the ownership in 1980? You mentioned 1% today, thereabouts.
I tried to look it up before we got on, and I don't. I'm sure somebody in the audience knows, but I had a great chart on that, but I don't want to say because I don't recall offhand, but it was much higher. It wasn't 5%. So
yes. Okay. Someone will let us know in the comments.
Sure. Right.
All right. Okay. Look, so right now looking at the gold market, gold price looks pretty good, right? We've been sort of touching 2000 thereabouts, hovering around a pretty healthy number. A lot of the majors have performed very well. up 50%, up 100% in many cases. However, beyond that, the equities have very much been unloved thus far. And, even advanced developers right now, they look like bargains. Like, it's amazing the valuations have not, en masse, have not moved at all. Where are you looking right now? Where are you allocating capital? And if you want to speak to that cycle of money flow into the sector, I'd appreciate that too.
Yeah, well, the cycle is basically the new dollars come into the biggest senior major producers first, then it goes on down the line. Eventually, you're reaching the juniors and explorers. But yes, I think it's if you look at Tavi Costa had a great chart recently. If you look at the gold price and you look at the venture exchange. The stocks there, just in total, in general, not anything specific, just the total exchange for the junior miners, they would have to rise 286% just to match what they did the last time gold was at this level. So the gold price has started. We've seen the majors start. The juniors have not yet started. And so that points out an opportunity. Obviously, I know a lot of people are probably already long, but it gives you this final chance to kind of fine tune your portfolio. Drop anybody that's really, really not performing well or is not expected to perform well going forward, and make sure you're focused on best of best, right? So, but that shows you the opportunity that's available and just how much the juniors have yet to rise. So I think that's almost baked in the cake at this point.
Well, help us carve out some value here. Where should my viewers begin to look? What stage do you think is most attractive right now? Metals, jurisdiction, whatever is front and center for you, Jeff.
I think the answer to that question really comes down to the individual investor and what kind of investor they are. What kind of risk do you want to take on? What's your age? What's your net worth? What kind of financial breadth do you have? What kind of emotional maturity do you have? So a lot of those answers will tell you kind of where to go. You can just buy an ETF or buy a mutual fund or buy into some of the bigger royalty plays if you want low risk. I'd probably even buy the royalty plays like Wheaton before I might buy a producer. So I hope I don't get any shots taken at me there. But I think they're safer. They are overvalued, but here's the great thing about interesting thing about royalty plays is they're always overvalued. When I first came into the industry, they were overvalued. So I remember when Franco-Nevada first started, it immediately went to an overvaluation right after it started, and it's still there today. So don't let the overvaluation necessarily scare you off of those. But those would be a less risky way of playing the market and having good participation in the market. Developers are in that boring stage, so they tend not to see as much excitement. And then, what I like to specialize in is the juniors and explorers and those. That's pretty much what I've dedicated 90% of my time to on the website is looking at those. But I will say I'm very particular, and I probably own at least twice as many stocks as what are on the portfolio on the website. And that's because I only want best of best on there. And so I'm not going to put something on there where the CEO's last job was at a marijuana farm and the project's in a war-torn part of Africa. I'm just not going to do it. I don't care too much what that drill result is. So I'm going to play it conservative, because we're already in the most risky, one of the most risky, investment arenas in the world. So why add on to that risk by doing that? So I'm a conservative speculator, I guess you might say.
Okay, I like that. Yeah, and if you're going to go down to that riskiest end of the chain, which is where I like to play too. It's where you get the most torque. Should you be so lucky, it's absolutely where you can get cleaned out if you're not paying attention. And an exercise I find super useful is, how quickly can I get to a no on this? How quickly can I find a red flag and push it off the desk, right, and move on to the next? And
that's exactly right. In fact, I was on a conversation with a company last week, and I'm like, okay, where's the fatal flaw here? I keep looking for the fatal flaw. I was telling them this right up front. I'm looking for the fatal flaw of this company, and I wasn't finding it. But that's the point. I was just right up front with them. I'm looking for the one reason that I can just eliminate it and get on to the next one.
Yeah. Yeah.
So I like that strategy, Jay.
Interesting. All right. So any companies you can share with us today, Jeff, that you're excited about, that you think my audience would be smart to take a look at?
So I just put out a tweet, and that would be a good thing, because I think, all of the companies that are on my site, I'm personally overweight. That's why they're there, because I either was overweight or decided to go overweight by inviting them. So, but there's some that I've put the most money in over the past, say, 6 months. And if I can just find it real quick, Jay, that was, here it is. So,
yeah, I think I found the tweet too, but you go for it.
Well, it was American Pacific Mining. Just briefly, they're going to have upwards of $40 million going into their projects this year. That is not a misstatement. 40 million. This is a mid-tier company that's still has a junior market cap. That's how I kind of tagline this company. And it's really true. 40 million. How many juniors do you know they're going to have that much spending this year alone? Bolivar and Silver, Sean Kun is the real thing. He's totally transformed that. Great silver holding that is lower risk, that is going to get bigger, that's going to get a lot more silver ounces are going to be added, and it's probably going to be bought out. That's going to be an easy buyout target as this cycle goes on.
You think Hecla looks at that? Or I mean, they're right next to Hecla. You have a acquire in mind? Okay. Yeah,
sure.
Interesting.
What's fun is, doesn't matter who buys them out, right?
Yeah, it does not.
Hercules Silver, I really like this one. Early stage silver explorer. It's actually not early stage. There's a historical resource there, but they're finding a lot of new zones. That asset's going to get a lot bigger. And now they just announced that the evidence is adding up that they're finding a copper porphyry at depth. If that goes, that'd be a total game changer. That thing won't go 10x. It'll do more than that. Independence Gold, I really like that. Randy Turner's the CEO, tons of experience, right next door to help me out, Jay. It's right next door to not the Valentine mine, but
I'm no help here. Can't do it.
Oh shoot. Anyway, it's on the tip of my tongue. But anyway, they're right next door. It could be bought out easily. The thing is, it is a small gold resource now, but it's higher grade than the big asset right next door. So they could easily be bought out. Now they need to prove it up to, 1 million ounces or more and make it more attractive, but that's exactly what they're doing. They're drilling right now. Results are pending. So that's one. And by the way, that's one a lot of funds have been moving into recently. So that's one I like.
Okay.
P2 Gold, that's been a longtime favorite of mine for probably more than a year now. And that's one I rated on the site as a strong buy. It's still very undervalued, yet they have two assets. Both have a resource on. Both are going to grow. One has the likelihood of a porphyry target underneath. They're going to be drilling it this summer. So there's a lot of huge potential there. Remember, these are the guys from P2 or from Pretium that formed P2. So they know what they're doing. They have millions of dollars of their own money at stake there. Scotty Resource Corp, I really like Brad, what he's doing there. This is really shaping up into a major gold discovery. He's going to just continue to aggressively drill that thing out. They just announced they're going to drill 20,000 meters this summer. So that thing is going to get bigger and bigger. I talked to him at the last conference, 121 in Vegas, and he's like, I'm not really interested in slapping a resource on this thing yet. I want to see how big it is. I loved hearing that. Suma Silver, Galen McNamara has won awards, two major projects. doing a lot of drilling. They're fully funded this year. This is going to go. I think this will be just fine over. Now, I'm underwater on that stock, actually, so it's actually a good buy right now. But I think that one goes. And the last one was a fairly new pick, was Westward Gold. Drilling on the Carlin or Cortez trend in Nevada. And a lot of people think a lot of the gold's already found there, but they're finding that it's not. They are drilling right now. By the time this airs, the results might be out. But they just drilled the top half of a hole, found gold mineralization. But what they're really interested in is the bottom half of that hole. That's being drilled right now as you and I talk. And so the results there could be very interesting. And then Laszlo just mentioned, I added a brand new pick to the website, Heliostar Metals. This is a company that I've liked, but all of a sudden they had this huge transformation, this huge transaction that made them go from a gold explorer to a pre-producer. And they've got a game plan that, based on the current valuation of the stock and what these goals are that management has, what the valuation could be on this, we could see a 5x within 18 months, a 10x within 3 years, if it reaches full valuation. And that's based on current gold prices. So I really like this company, and we're probably going to see some exciting things from it. That's a healthy list, Jeff. Thank you. Yeah. I know people are rewinding this right now to catch some more details. You know what the great exercise is, Jay, is, I've got a bunch of mining stocks, but again, only the best go on the site. And so a good exercise for people is to take your whole list and say, okay, cut it in half. Mm-hmm. Cut it in half. Go through each one and you pick out who you feel, if you own 20, pick out who you think the 10 strongest are. Cut your list in half. Force yourself to do that exercise. Now, I'm not saying you sell the other 10. I'm saying it's a good exercise to understand what really makes for the strongest of strongest. Like you and I do, people should look for, hey, just find the one fatal flaw. Just find one flaw, whether it's the political jurisdiction or whatever it is, and focus just on best of best. And it doesn't guarantee that you'll be right, but it puts the odds so much greatly in your favor, and you probably will have some big winners in there too. I completely agree. And let me ask you a question with that. So the downside to trying to say no is that there'll always be a few that got away and make you question your process, right? Because inevitably that first time mining CEO who used to be in cannabis, who has the sketchy project in the war-torn country, he may just, get lucky with the drill result. Who knows? Like, speculation can just go nuts sometimes and doesn't always make sense. How do you combat that though? Because that, I think investing is so emotional. And, one thing I do is I try to remember, like, some will get away because I work hard to say no, because I watch the best investors I know work hard to say no. That's why I do it. They try so hard to get to the no so they can move on. And yes, you'll miss the odd run here or there, but there's a new bus every 15 minutes. Just, come back to the desk. And how do you deal with that though? How do you stick to your rules when emotions get real? Yeah, it's a great question. You like a lot of things in life, you have to have a strategy, right? I mean, it's a cliche, but it's really true. You have to plan your dive and dive your plan. It applies in many aspects of life, right? So you have to have a strategy. You have to stick to that strategy. And yes, you will miss some, but here's the thing. No matter what strategy you pick, whether it's one that's a complete opposite of my strategy, you're still going to miss some, because there's 2,000 to 3,000 of these juniors, and you're still going to miss some no matter what your strategy is. What I like to do, though, and what this method that you and I and others use of finding the flaw right away, is to very simply reduce risk. I'm looking to reduce my risk. So I don't go out there looking for, okay, who's going to go 10x or 100x? I'm looking for, okay, what's the flaw? So I can eliminate this, so I can reduce my risk. That's the whole idea. And again, I only do that based on experience. I've been burned, more than once on a political jurisdiction. That's why I'm so adamant about it. So I'm adamant about my rules, and I acknowledge that I may miss some. In fact, back in the day, do you remember, Jay? You're probably too young for this, but Aurelian Resources, when they found the original Del Norte deposit, it was down in Ecuador. And I know that back in the day, because of politics there, I may not have bought that stock. And it went up 10,000%. It was the find of the decade easily. And, the politics did trump its ugly head, right? It took years and years for that thing to go into production. It got sold by one company to another. So anyway, you're gonna miss some. The idea, though, is to find what strategy fits you and incorporate that into your overall investment strategy and go with it and stick with it. If you want to make an exception and go after the one, hey, I think this one's really going to go in that war-torn part of Africa. I'm not trying to pick on them, right? But just as an example. But if you want to do that, make that the exception, not your rule. Yeah. Stick by your rules and make the one you think has got a real shot at a high flyer the exception. And if it doesn't work out, then you'll stick more to your strategy.
Yeah. And keep tabs on how many exceptions you're making, right?
You're right. Exactly. Exactly. Right.
Yeah. And, okay. So next point I'll bolt onto that is you gave us 9 companies to have a look at, right? And these are just, you've got cash in these deals. It's public information on your website. Yeah. And anything can happen here, right? It's a high risk game. But why I want to point that out, you gave 9 and there's more on your site, is that very frequently investors look for that one ticket, right? That one lottery ticket. And I've realized this since having this channel, and I'll talk about where I'm putting cash and all this. And if I'm excited about a company that I've recently invested in, I'll share that. And I don't give advice, but I'm happy to share, what I bought and why.
Yeah.
And if the company that I put cash into doesn't perform well, I can tell right away that too many of my viewers went all in on that one company. Yeah. As if like this is going to be the sure thing, right? It's like, no, you got 9 companies here, right? You got more online, more in your portfolio because, right? Like they're asymmetric risks here, and how many aren't going to do anything? 1 or 2 are probably going to just crash, right? But you're looking for those few that outperform the balance, and you need that basket almost as an insurance policy because there's way too many variables. Speculation by nature is somewhat random at times, and it's impossible to predict any outcomes.
Yeah, absolutely. Well said. You took the words right out of my mouth. You need to have some balance in there. And I do focus some on some developers. I do have one producer in there. I don't have any royalty plays. Nothing wrong with them. I just, I'm focused more on the Babe Ruth type plays, So, and that's the idea, right? With juniors and explorers, you're gonna hit more home runs, but you're gonna strike out more too. So, and I have some early stage stuff on there as well. So I like, even having some balance on the portfolio just for that very reason, to have balance. But yeah, you never put all your money in one. You can't do that. So I like to go overweight some and underweight others. And that's still a judgment call. But you have to have balance. And, the idea is that probably if you have 10, let's say, 5 are going to go nowhere, 2 are going to go bust, 2 are going to go, 5x or whatever, and you're going to have 1 that's just going to shoot to the moon. Right. That's probably a good, scenario and outcome. Last year for me, that was Snowline Gold. It went 10x, 11x. While gold was falling and juniors are down 50 to 75%, so you're going to have those. But, my famous GDX Jeff, that was a bust. It did not do well. I still own them, by the way, but you got to have a basket. That's the idea. Yeah. And you got to be prepared to take those losses. And I think you have to, it's really important to go through I think as Rick Rule says, the religious experience of watching share price fall 90%. And then, it's an important part of the investor journey. And I don't think that you can just be instructed on how to deal with that. I feel like it's one of those things you have to go through. And in my case, I'm a hard way learner, like a few times, right?
for you, because you can make the plan, but then make the exception to the plan, right? And that's
Right,
just slippery slow.
right.
That's why I say, like, yeah, make the exception, but then keep track of how many exceptions you're making in that portfolio.
Exactly. Right. Yeah. Find what rules work for you, what kind of stocks work, what kind of equities you're attracted to most. Come up with your rules, whether they're mine or somebody else's, it doesn't matter. Have your strategies and stick to them. And then if you really, really want to get invested in something that's riskier, that's your exception.
Yeah.
But it's not your rule.
It's not your rule. And, again, back to like balance, it's, I know you also buy physical gold. You've got equal sides of that barbell buffed out, right? And I imagine, if the black swan event were to occur on the speculative side, you're going to be okay, right? Because of what's on the safe haven side of that barbell.
That's absolutely right. Gold isn't a speculation. Everything we're talking about is a speculation. All these stocks, every single one, even a royalty play. But gold is not. Gold has no counterparty risk if you hold it yourself, and that's your ultimate safe haven. At the end of the day, that's the one thing that's gonna not suffer when the dam breaks.
I want you to tell my audience about Paydirt. This is exciting.
Yeah. Well, yeah, it was a lot of fun. It's a book on basically how to pick mining stocks. It has nothing to do with the current environment. It's a evergreen book, but it'll take you through the system I use, A to Z. And you probably know a lot of the names, Jane, but if not all of them. We put 16 experts in the book as well. So I spent all last summer interviewing them, and I have sprinkled quotes from all of them throughout the book on different things. And the one thing that was kind of interesting to realize as I interviewed these guys is they were very specific on what their guidance was. You look for this, you look for that. If you see this, you don't invest. They were very specific, no ambiguity whatsoever. And the book is like that too. It tells you exactly what to do. So it was a lot of fun. It was a lot of work. It's still just a digital book right now. It's a downloadable PDF, but after I get through my back surgery, then I'm going to, I actually have the process going right now to get a physical book. So, sometime this summer we'll have a physical book as well. But just a heads up, unfortunately, we're going to have to raise the price a little, which I don't want to do. This is not a money-making venture, right? But, there's a lot of costs involved, and Amazon wants their lion's share cut, so I have to raise the cost a little bit, but it'll still be reasonable. So, but I think the main thing I'd say, it's an evergreen book. You can pick it up and apply it to uranium stocks. You can use it toward copper stocks. I focus on gold and silver in the book because they're the most exciting to investors usually. But you can apply it to any mining stock you want, and the system, it works. It's worked for me. It's, so that's all I can say.
All right. Well, I hope we'll have physical copies at the VRIC in January. That would be fun.
Oh, absolutely. Yes.
Okay, awesome. And check out thegoldadvisor.com. Just tons of content up there, including a lot of companies that you're looking at, Jeff. And an amazing resource that you built there in the last couple of years, by the way. The Gold
Yeah, and if full disclosure, it is a sponsorship model, so the companies are paying for it as opposed to you, the investor. I didn't want to do that system again. I've done that before. It's a lot of fun. I love it, but oh my gosh, it's so much work. So I went the sponsorship role instead. But again, the bar is pretty high for a company to get on that site. So for every 4 or 5 or 6 companies that want to come on, only one gets invited. So, but yeah, a ton of free content to look at the portfolio. It just requires an email address. We don't do anything with it. No spam, no selling, anything like that. So, but it's a lot of fun. I'm having fun. I got to be honest, Jay. It's a blast. I love what I'm doing, and I think the timing for us right now is pretty darn good.
I love that. Well, let's cap it there. That's a good good conclusion. Look, Jeff, thanks so much for your time. As always, thanks for coming back on the show, chatting with me, and getting in front of my audience.
Absolutely, Jay. Thanks for having me, and hope this is useful for everyone. Most of all, I hope people hit pay dirt from it. That's what I hope most of all. So.
Yes. Love that. All right.